is increased adoption for use cases like cross-border remittance, increased adoption for use cases such as tokenization of securities on-chain or derivative assets or real-world assets that are tokenized, and on-ramping and off-ramping from those as in stablecoin denominated terms. And so as we've seen these use cases grow and the technology be increasingly adopted and the efficiencies of blockchain grow or be recognized in the marketplace more and more, as well as the AI enablement of development of these decentralized apps that allow for engagement in stablecoin ecosystem use cases. We wanted to highlight these to the marketplace as we cover the payment space and see how some of the incumbents are evolving and some of the new technologies there as well.
Paul, when I hear about all the tokenization and, like, for instance, the tokenization of housing, it just reminds me of, honestly, what led to the GFC. So, it gives me a little bit of pause. But I know stablecoin is a different story because of, how it's pegged, right? It's supposed to be a different story. And actually, for our audience, what's the best analogy you use when you're explaining to your aunt or uncle explaining stablecoin? Because we do have a retail investor audience, and some are more familiar with the equity side.
Sure. When we think about the structure of stablecoin, it's blockchain token that tends to represent a pool of collateral, which the issuer custodian has to back that token and to try to ensure that that value is staying at that one-to-one mark relative to its underlying fiat. 99% on our estimates, 99% of stablecoin is denominated in US dollar terms. But if we think about accounts in traditional finance, like money market checking accounts or money market mutual funds, that value represented in the account is representing a pool of other securities, or a pool of fiat, or a pool of somewhat risk-free assets like sovereign debt. And so when we think about stablecoin, this is a digital native version of that can go beyond the borders of a particular jurisdiction because it is native to the internet, as the blockchain is, and as many of the underlying networks that they are running on are. And that's part of the purpose, is for global settlement to be 24/7, 365, and relatively instantaneous and irrevocable. And so that's that's the analogy we like to use for stablecoin and how it's structured.
Speaking of the global aspect, you're bullish on Visa and MasterCard amid, the proliferation of stablecoin. Tell me how you see them as winners, as payment networks as winners in this environment.
Yeah, no, great question, Diane. So when we think about Visa and MasterCard, they've actually been very proactive about engaging in the stablecoin discussion. They have developed tools for issuer clients and for stablecoin partners to pilot and also to put into practice ways of leveraging the efficiency, the speed, the effectiveness of that infrastructure, and also to enable customers and clients who want to use this technology for what might be cheaper or faster execution relative to traditional cross-border rails, to be able to use it through their existing relationships with issuer banks and their Visa or MasterCard credentials. And so we see partnerships like with Circle in that regard. And we also see the issuer banks using Visa and MasterCard consulting services, essentially, their value-added services, to enable this infrastructure for them. So Visa and MasterCard continue to act as a bridge between fiat and money as data, essentially, whether it's stablecoin or other digital forms of money, and also as an enabler of infrastructure development for themselves, for the networks that are running stablecoin, and for the banks.
Okay, you said money is data. Data is also money. Clearly, we live in that time now. Paul, we'll leave our conversation there. for time. That's Paul Golding, U.S. Head of Research Technology at Macquarie. Coming up, it's time for Options Corner. We'll chart and trade Micron after multiple analysts raise their price targets on the memory company. Morning Movers will be right back.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a
Let me get my drink first. Alright, give me uno momento.
1 p.m. Eastern.
I'm still waking up to y'all, but try to be consistent. Consistent reason. The money's gonna be consistent.
Yep.
We gotta be consistent.
Welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
And Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
We're back on Morning Movers. Micron is on the move higher in the pre-market after multiple analysts raised their price targets on the memory company. RBC Capital boosting its target on shares to 525, maintaining an outperform rating. Baird and TD Cowen both boosting their targets to 500, maintaining buy equivalent ratings. Micron has rallied nearly 50% 2026 amid a broader memory stock surge. Time now for Options Corner. Joining us now to take a deeper look at the chart is Duke Data himself, Rick Ducat. All right, Rick, talk to us about the trends you noticed in this chart for Micron.
Yes, as you said, Diane, memory's kind of the king of this semiconductor sector right now. You can see Micron's vast outperformance versus not only the SMH semiconductor ETF here, which is up 69% during the past year, but I mean just the broader market, XLK. Micron, meanwhile, up 313%. And it's not just Micron either. It's this storage sector. You can see these companies like Seagate Technology, Western Digital, SanDisk. These are, again, the vast outperformers versus the other semiconductor companies here. Everything else has been left in the dust by this fierce rally here. So now when we look at Micron more specifically, our steep upward channel has been broken. We now have a downward sloping trend line here in white, and we seem to have stabilized for now at this level near 364. You can see this marks a repeated low point for price. Below that, we had a gap at which the high point came in around 345 before we had our push to the upside. Meanwhile, resistance, the area here near 438 marks our best closing price. We also have 455 here marking the intraday high. So an interesting breakout scenario here. We would be kind of between these two lines according to our mark price the last time I checked here. So should be a noteworthy trading day for us to begin the week with here. Our moving averages, we have crossed above all of them here. Our shortest weekly 5-day EMA in dark blue here lines up with our trend line. So this could be a supportive area as well. well, near about 411 roughly. Meanwhile, RSI crossing above the 50 midline, breaking its downward sloping trend line in red here. So a more favorable situation for the bulls according to this indicator as well. Finally, our volume profile study shows that price is starting to push above this heavy volume concentration here, this kind of range between about 375 to 425. So this would then be the supportive point to be on the lookout for from the volume perspective, Diane.
Okay, so what's the approach you would take for an example trade? You point out that strong performance has had this year, the outperformance within memory, and it's also got earnings in front of us. So what's your take here?
Exactly, yes, earnings coming up as well, too, within a couple days here. So looking at our expected move for the next few months here, we're going to look at the May 15th expiration here, our green box 60 days out, plus or minus about 25% during that time horizon here. So when we overlay our studies over each other here, we can see this notable area. It was an old area where our gap came in, our volume profile node here. It's kind of below our trading range, and it's the edge of the expected move boundary. So we'll be targeting this area with an example trade, -1, May 15th, 350, 340 put vertical at a 250 credit here. So $250, our credit received would be our max profit. Our max loss, $750, would be our the most we could lose in this defined risk trade here. So about 1 to 3 reward to risk ratio, a common example traders would look for when structuring a trade. Break even, 347.50, about 22% to the downside, expected move about 25%. So more of a higher probability trade, banking on that supportive area holding. Certainly not a guarantee it will or anything like that. Just looking at the technicals here, that seems like a noteworthy area where the bulls could find a foothold here based on strong prior price activity that kept bouncing off that same area several times, Diane.
All right, thank you, Rick. Appreciate that. We got futures indicating a higher open today as oil takes a step back. Crude oil sitting around $95 a barrel. That gives some momentum to the bulls this morning. So you've got S&P minis rallying almost 1%. NASDAQ 100 futures better by more than 1%. Dow futures up 0.75%. Small cap futures rallying more than 1% as well. Thank you so much for joining us today on Morning Movers. I'm Diane King Hall. Download the Schwab Network app. It's available in the App Store and tune in 24/7 on schwabnetwork.com. You've got Opening Bell with Nicole Petalides up next.
Dang, it's already done, huh? 30 minutes. She's getting a little ahead of herself. Let's get it.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Press it.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell,
Like
we've got you covered.
Client's positive review.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines,
They said
live
social
analysis,
media
breaking
is
news, and sharp
counting
trade
now.
ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
But you're not
Smart
supposed to go on
insights,
like it.
actionable data, veteran
Oh,
traders,
adopted the
and trusted financial journalists
and is
streaming
responsible
live
for
and
it.
on demand.
Schwab Network, streaming 24/7,
okay.
any screen,
So it's got to be
anywhere,
chill from then
free.
on, or I got to take it down.
SchwabNetwork.com.
Okay.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim's my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Lower portfolio turnover. Mutual funds. That might be the expense ratios. Yeah, actively managed. Yeah, actively managed funds, yeah. Higher fees, turnover, yeah. Pretty sure they can do that shit whenever they want.
Welcome to Opening Bell right here on Schwab Network. I'm Nicole Petalides, and I'm so glad you are with us. We have a big hour planned for you this morning. Of course, we're watching oil right now, 95.25 the barrel. That's helped stocks a bit. We'll have the very latest on the war in the Middle East, which continues. That fighting continues there. We'll discuss what it means for the energy trade, possible impact on the Trump-Xi meeting, the summit that was due to happen in April. Also, the latest chip trade, NVIDIA's GTC. That conference is set to begin today, and Micron earnings are due out on Wednesday. Here's a quick look at the markets. Of course, we've been down 3 weeks in a row. Right now, stocks are higher. The S&P 500 futures are up 0.8%, 9 tenths, up almost 60 points at 67.45. The Nasdaq 100 up 1% today at 24,872 for those futures. Dow futures up 338, and the Russell 2000 futures up 1.1%. This is the 10-year bond yield sitting at the same place it was last week, that 423-ish. The VIX is at 25 and change, and we are seeing the U.S. dollar. It was actually at 100. Right now, it's at 99.75, and Bitcoin 73,985. That's up 3.7%, and the volatility index, as I noted, is down 7.5%. So that is our big picture. Still, the Strait of Hormuz is closed for all intents and purposes, but obviously a concerted effort to try and see if that can be opened sooner than later. In the meantime, senior markets correspondent Kevin Green is with us to take a look at all of this. U.S. is allowing Iranian takers through the Strait of Hormuz, according to Scott Bessent. Let's hear more about what's on your mind. Good morning, Kevin.
No.
Good morning, Nicole. Yeah, we continue to see a lot of volatility within the oil complex at the moment here. If you're looking at WTI, it's down about 4% at the moment here, a little bit more than what we are seeing for Brent crude. So you are seeing more of a divergence or bifurcation if you're looking at those particular spreads here. Now, we've seen a lot happening over the weekend. Kar Island in Iran definitely, obviously get struck. And that is actually causing maybe a little bit of confusion as to what is going to be next when it comes to this conflict. That island itself controls and is responsible for around 90% of the Iranian exports, and it's really strategic because a lot of the land or the shore in Iran is too shallow in order for tankers to actually get up to close enough for a port here. But we are seeing oil move to the downside, and that's because of maybe some of the uncertainty, some of the comments going back and forth between the U.S. and Iran, and also the fact that we are not seeing, I haven't seen any announcements from countries that are actually committed to trying to send ships over to the Strait of Hormuz to secure it at this point in time. And I think the market's also kind of signaling that maybe this conflict can stay, for the most part, contained to the area that it is in right now. So you are seeing oil move lower, gasoline is moving lower when you're looking at the futures, as well as the
notary
grains,
law
soybeans, as well as corn. Those are also energy products in itself, and those are also moving lower. So I'm not sure if there's overall optimism that the resolution is going to be made here in the next couple of days, but I think it's the fact that we are not seeing seeing additional countries, at least for now, getting involved in the conflict.
We gotta fix that.
Yeah, I would agree with you. I don't think there's optimism at this point. We're not hearing everybody jump in. I know some Greek ships, 2 Greek ships passed through. You know, this may be more of a U.S. problem, but they have the ability to plant mines very easily, from what I understand, in the Strait of Hormuz, which is very dangerous. As far as what's going on with the fighting, that continues. That also doesn't seem to be letting up.
It's not actually. We are still seeing it
financial exams,
still being targeted, as well as
securities, insurance, real estate, healthcare, technology, finance, education.
Saudi Arabia does have this east-west pipeline that they are now leveraging a little bit more in order to
become a goddamn notary
some of the oil from the Persian Gulf.
All of this is free.
Back over to the Red Sea, which
hours
is a little
upon
bit more
hours
safer
upon
at the
hours.
moment here.
Everything
so
you need.
We are still seeing production levels being taken offline, but
look at all these side hustles.
Seeing a little bit more stabilization, I think, is probably the key word right now.
Look at all those
market. Now, you also mentioned the fact that we are seeing tankers going through the Strait of Hormuz, and that is true. There have been reports that India has inked maybe a short-term deal in order to get some energy supplies over to their country. They are seeing a significant shortage when it comes to liquefied petroleum gas, which is going to be butane and propane, which is significant for them when it comes to cooking and things of that nature here. So if you start seeing a lot more countries working with Iran and trying to have these one-off deals in order to secure safe passage for their own tankers, that's where you could also see a little bit more relief when it comes to the oil markets in general. The U.S. flag tankers, there's not a significant amount of traffic that goes through the strait already, so it wouldn't have a massive impact when it comes to the global economy. But once again, these are one-off deals that seem to be made at this point in time, or trying to be made at this point in time. And hopefully we do see cooler heads prevail. There's also this concern that President Trump could actually cancel or delay the meeting with China as well. That also kind of put a little bit of a monkey wrench within the oil trade. So still a lot of volatility. Technically speaking, though, Nicole, it's still showing higher highs as well as higher lows, and that's ultimately bullish when you're looking at the crude oil complex.
Right. The President Xi summit, the meeting that was due to take place in April, that may be postponed?
Oh, gosh.
It may be. I'm not sure if we're given a direct reason as to why. Obviously, there's several different factors taking place. The president did ask for additional assistance for securing the Strait of Hormuz. China was one of the countries that were called out in order to assist with that. It doesn't appear that they are going to be joining that effort, at least for now. And then there's also potentially, obviously, security reasons that also may be leading to a potential delay because of the Iran conflict here. So you are seeing maybe some prices moving to the downside because of that, especially within the agricultural complex. But it does appear, just by the comments that we've heard so far today, that they are still talking and trade talks continue. And it appears that they did come to an agreement to keep the current tariff levels where they are at right now, which is obviously providing a little bit more optimism. Just the fact that him going over...
Duration approximates the percentage price change.
Yep. Okay. Kevin Green, thank you for that. We also have our Fed meeting this week on March 18th, so we'll wait to see what the Fed has to say. The Federal Open Market Committee not likely to change rates or cut rates, even though the president has been clamoring to cut rates immediately. Also, you have what will happen on May 15th. When Jay Powell is supposed to step down from his role and Kevin Warsh theoretically would take over as our Fed chair. That's another element. And I bring in George Sillis because we have some more stocks to watch. And we have a lot of earnings this week too, George, that I'll get to. But in the meantime, you have Nebius with an up arrow. Good morning to you.
Good morning, Nicole. Yeah, I mean, Nebius is really one of these companies that's part and parcel of this hyperscale AI data center build out. It's a major competitor of CoreWeave. But looking at this business and the price action, it looks very favorable. Nice price action this morning, one of the leaders, percent gainers in the hardware space, but they continue to announce new deals. Another deal with Meta Platforms for infrastructure build out. They actually confirmed about a $12 billion confirmation revenue deal with them, and that's of course integrating artificial intelligence Rubin platform from NVIDIA. So this is part of an additional potential $27 billion deal with Meta Platforms going forward. And this is actually quite a bit in terms of sales for Nebius, which is less than $600 million in the last 4 quarters, estimated sales this year, around $3.5 billion. So this deal alone is about 4 times the estimated sales growth for Nebius's revenues estimated this coming year. So this continues to move forward for Nebius, and it creates a situation where Meta Platforms is still aggressively spending money on their CapEx.
Because this is at the same time that Meta's doing some layoffs, right?
Yeah. So if you just look at the opposite news, Meta, like you said, is announcing potentially another 20% layoff going forward. They haven't announced any numbers, specific numbers or dates, but they talked about how they're moving pretty aggressively in AI capital expenditures. In fact, if you look at CapEx last year, around 72 billion. Estimated numbers are somewhere between 115 and 135 billion this year. That's a substantial portion of their sales, about 50% compared to about 36% last year. So unfortunately, they're looking to carve out some cost savings from workers. They're estimating again 20% without deadlines or concrete numbers. But this is a big number considering the last time they had this amount of layoffs on a per capita basis was going back to 2022 when they faced some challenges with too much spending with metaverse platforms. But nonetheless, Meta Platforms is up about 3% based upon this news.
All right, and I was noting that we have a lot of earnings this week. We have a Dollar Tree today, Lululemon and DocuSign tomorrow, and then Macy's, Five Below, General Mills, and Jabil and Micron on Wednesday. So those are some biggies, right? And Alibaba and Signet and more on Thursday. Some of your thoughts just about earnings season?
Yes.
Oh, yeah, I think we're winding down, but there's some big ones this week, especially I think Micron, important. In fact, Nicole, the hardware names in the past week have actually picked up a lot of momentum. And in fact, going into this open, there's a possibility they continue to move to the upside, which again can carry this market. It's all contingent right now on oil. There's an inverse correlation between the market and oil. So if we see some subdued price action in crude, we may end up having a nice day on the open, but also continuation in the close.
Yeah, understood. I mean, any thoughts on the Fed meeting this week on the 18th?
Oh my God.
No movement on rates. You have to consider inflation is still elevated. I don't think there's any movement on rates. Perhaps talk about some of the challenges in the economy, but also the labor market. But, I think they'll mention a little bit in terms of, tariff policies. And now we've got oil as sort of an issue with going forward CPI numbers. So that's probably what they'll talk about. But nonetheless, there's not going to be any movement on rates.
Yeah, all right. Good to see you, George Sillis. Thank you. Happy Monday. All right, getting you ready for the trading day. Gene Goldman is standing by from Cetera. We'll talk about the week ahead. How are you feeling? And we'll be right back here on Opening Bell.
I don't know this one at all. I guess we could take our hand. I got 10 free hands today. Hold on. There measures the total return an investor receives from an asset over this. It accounts for both the change in the asset's price and the income generated. Divided by beginning. exam chat. Be sure to include all forms
This
of
is
return,
Fast
both
Market,
capital
built for
gains,
traders who want
losses,
more
and
than
any
just
income
headlines.
received.
We walk you through
If
trade
you're
ideas,
enumerated
the
before
structure,
dividing.
risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Divided by beginning.
Hi.
So 17.5.
I'm Jean.
Wow.
And I'm his mom.
Sometimes, you know,
Oh, okay.
you could have done better.
That's not that okay.
Same goes for where you invest.
Ending minus
Level up and
beginning.
invest smarter with
Plus
Schwab.
income divided by
Real-time
beginning.
market moves, earnings breakdowns, and
Okay.
trade-ready insights. Follow
Just-
me on X at
just gotta know these
Sam_Vardas
things.
and connect with me on LinkedIn or Instagram for more.
Who would have known? Who would have known?
Welcome back to Opening Bell. We're getting you ready for the trading day. Gene Goldman of Cetera, the CIO there, is with me. And obviously, we've had a lot of volatility, a sell-off for 3 weeks, but we're not that far off the highs. And oil has pulled back. If you look at today's levels versus a week ago, oil is lower, right? We're at $95. Some of your thoughts here as the opening bell is about to ring.
Wants to double dip.
Sure. Thanks, Nicole. Thanks for having me back on your show. Listen, I think this time is a little bit different compared to past war crises and past events. You know, we've seen this sharp rise in oil, aggressive approach by Iranian armed forces to impact the Strait of Hormuz. And I think the most important point is just a lack of clarity when the war could end. You know, the markets like transparency. They love transparency. Right now, there is no idea when this war will end. So given all those facts together, I still think market volatility is going to be elevated for some time. And then you have the add-on effects, the effect on the Fed, the dollar appreciating, and the fact that we started this war with a much higher market valuation than past crises. A lot is going on for the markets right now.
What do you think about the NVIDIA conference? I know we're going to be talking about it a lot throughout this whole day, but the GTC conference kicks off today. It's the 16th and the 19th, really. Everybody's waiting to hear what Jensen Huang is going to say. You know, is that the kind of thing that can move the market this week?
It could. I think the thing to think about is that if you look at technology has had the worst drawdown during this pullback, during this sell-off. And I think a lot of the technology companies, especially in the software area, are a little bit oversold given the conditions that software is not going away. It's not going to disappear. I think some of the valuations suggest that could happen. So we do think it's a good opportunity to be nibbling a little bit in technology. And I think we'll get some great news this week in terms of technology and the AI and the whole AI story.
Do you like NVIDIA or tech stocks or software stocks?
It's, you know, we're neutral towards technology right now. I think there's some opportunities to be very selective, but our favorite sectors right now are the more defensive, defensive growth, like healthcare. You know, valuations are attractive, aging demographics. We love industrials. We upgraded industrials back in October of last year. We think, increasing energy infrastructure, supply chain, reshoring, defense spending. And then our new short-term market play is energy, given supply constraints, the war, demand from AI centers. But we think it's a very short-term tactical play. I mean, if you look at oil market futures, we do believe that they're suggesting a little bit of selling pressure later this year. So it's a short-term play.
It might be. It looks like 5%.
Understood. What areas do you like? Do you have certain sectors that you like more than others?
Okay, what is it?
Yeah, again, our favorites are healthcare, industrials, and energy. But I think the thing about broadly from a portfolio standpoint is that how do you navigate all this market uncertainty? And what we've been telling our clients and our advisors is simply this. Number one, remain focused on the long term, stay disciplined. Number two, overweight the U.S., underweight international. We are an oil producer. We are an oil exporter.
Wow, I'm
and given the dollar strength, the U.S. is a place to be. Also look to incorporate liquid alternatives. And then the areas that we're really concerned about high yield, we think high yield spreads are at historically low levels. There's some weakness potentially coming in the high yield area.
So at this point now, for the healthcare kind of names, what kind of names in healthcare do you like?
Yeah, unfortunately, I can't talk about individual company names, but I think from an industry standpoint, we like, managed care, we like biotech. I think biotech in particular, given the change where larger pharmaceuticals are looking for the new drug, the new opportunity. So we think biotech is going to do really well in this environment going forward.
Understood. And then for the industrials, why the industrials as a group?
Yeah, I mean, there's multiple reasons why. I think, you look at the energy infrastructure investment, you look at supply chain reshoring, of course, AI demand, AI-driven demand, just building out AI infrastructure. And of course, I hate to say this, but defense spending, we are in the middle of a war. Defense spending will be surging. And I think this is going to play right into the industrials. Plus, all this taken together, I think with a lower valuation, there's some opportunities here.
I saw over at, I think it was Morgan Stanley, where they were saying, look, we might get a pullback in stocks down to 6,300 in the near term.
Index fund.
But a lot of folks think we're higher at the end of the year. Where do you think the S&P travels, near term, long term?
Yeah, and then that plays in perfectly to our theme this year. Our theme this year was we expect market returns to be a little bit below average in the 4 to 6% range. So this volatility that we've seen, we're not surprised by this. We do expect maybe a correction. Corrections occur about once every 13 months. It's a normal part of investing. We do think stocks will be higher by year end in that 4 to 6% range for the S&P 500. But near term, there's a lot of headwinds. You've got Fed uncertainty. You have higher oil prices, tariffs. You have shipping lanes are being interrupted. You also have the stronger dollar, and lastly, you just have a lot of potential impacts on the economy. Taken together, we do think there'll be some near-term headwinds in the overall markets.
All right, and then when I think about what the Fed may or may not do, there's a lot of questions about the leadership and what the Fed should do, will do. What are your thoughts?
Yeah, well, first of all, this week I'm calling it central bank week. You've got the Fed and 7 other central banks meeting this week. At the end of the day, I don't think any of them are going to change policy. But what we're looking from the Fed this week, first of all, no change in interest rate policy. There's a 98% chance that they stay as they are. The second thing to watch is the dot plot. The dot
I've
plot,
seen this question
we don't expect,
before.
even though we have higher inflation, we have a surge in energy prices, expect the Fed to look beyond that surge and not necessarily raise their interest rate projection. Remember last year, the precedent was set. Remember when the Trump administration raised tariffs, the Fed did not raise interest rate projections. We think the same happens. And then lastly, the Powell press conference is going to be so important. This is his second to last meeting. And the question is, will markets perceive his comments, Jay Powell's comments, to represent the committee or represent his views? And I'm worried. We'll see what happens. But at the end of the day, Jay Powell is going to come out and say, as usual, the Fed is data dependent and emphasize this wait and see approach.
Right, understood. I mean, finally, Iran, China. The Iran war continues. And the China meeting may get postponed. Any thoughts, big picture on either of those when we think about the international story?
Sure. Yeah, and that international story plays into our portfolio and our market theses right now. Stay U.S.
Yeah,
we are underweight non-U.S. And as countries, especially those countries that are importing oil, like China, the emerging market nations, Japan, the European area, all those taken together, we are worried about those areas just because they need to import oil. Economic growth is slowing down. And you have, especially if you look at the Strait of Hormuz, about 20% of the world's oil supply goes through the Strait of Hormuz, and about 80% is purchased by Asian nations, especially China. Take all this together. This is going to put some near-term pressure on a lot of the emerging market nations, especially China, especially all the Asian emerging market nations.
I heard a survey today about how AI is going in the workplace.
Be able to do whatever they want with it.
It's sort of not as great as people thought. I mean, bosses were hoping for more, it seems, than some of the workers. And that there's also work slop, they're calling it, that when you do the work, then it's not necessarily 100% correct, and then you have to fix it. And so AI sort of translated into the workplace is not as smooth and easy as I guess people had hoped. I worry about the job market, too, because a lot of people think that their jobs will be lost to AI.
Yeah, I think AI is very interesting. AI is going to be so huge. Fundamentally, it's such a strong opportunity. But I think it's on a company-by-company basis. You look at our company, Cetera, we are using AI as a way to augment what we do. So my team, for example, we're using AI as a complement to what we do. We're not relying on it. You can't rely on AI, but it's a great way to improve efficiency, especially on those tasks that continually that have to be those rudimentary tasks can be upgraded through AI. So our team is using AI as a complement to what we do, but entirely relying on AI, I think as a labor replacement, that's down the road. That's far down the road.
Yeah, you gotta at least.
What about defense stocks here at home and abroad? I know that with extra military spending, also in Europe, some of those defense stocks. Is that a group that you like or consider?
Yes, we love it, especially if you look at European GDPs. The percent allocated to defense spending is increasing dramatically. The uncertainty, we have multiple wars, we have multiple issues going on. Take all this together. Defense spending, especially European defense stocks, U.S. defense stocks, all should do well, in our opinion, in this environment going forward.
Okay, I'm glad I asked the question. Gene Coleman, CIO at Cetera. Great to see you. Thank you so much. Appreciate it. All right, coming up, a quick break. We'll count you down to the start of trading on this Monday morning. Opening bell. We'll be right back.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Qualifies for the exclusion from an investment advisor definition if they register, they provide an.
I'm Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live at schwabnetwork.com.
Must be registered, be sponsored by the Federal, be exempt from all U.S. securities.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education.
Son of a gun.
Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Probably 30. Terminated, yeah, 30. Terminated?
Welcome back to Opening Bell. We're getting you ready for the countdown of trading. We actually have some green arrows this morning. This is oil pulls back. In fact, we're at 94.85, right? That's not 99. It's not 100. It's not 120 like a week ago. Sam Vadas is with me now, taking a look at all the market action this morning. Good morning, Sam.
Good morning. As you say, we've had oil coming off, still elevated though, but looking to rebound certainly with these stocks this morning, coming off 3 weeks of lows here as we were discussing on Friday, Nicole. And of course, we have come close to that 200-day moving average as well, testing that. So this is obviously something to look at as far as, technically important what we see today. Obviously, we've been looking at that 6,700 mark, which it looks like we're going to recoup as we get up and running at the cash open right now. So we've got green across the screen. We've got a nice day for tech as well as we get GTC up and running. I'll get into that in just a little sec. But we've also, of course, got plenty of headlines to get you across. I know that Diane's going to be digging into some of these stories as well with respect to Meta. We've got that deal, reports around layoffs. We've got Micron, reports around its Taiwan deal as well. And we've got Nebius too. So we're seeing Neo Clouds actually higher today. We're seeing some of the crypto-related plays as well that have been high. Interesting as far as some of the conversations I've been having around Bitcoin over the weekend. Just been asking a few people out there in the market. There seems to be a few analysts talking about the fact that they're linking the performance to some of the capital flight over in the Middle East right now with respect to some of the concern going on over there as to why we're perhaps seeing some surging demand for the cryptocurrency. So that's obviously something to take note of. But as I said, that's helping some of these crypto-related stocks. But away from technology, away from that, obviously a very big week as far as the macro is concerned. We're going to be getting plenty of data. It's called the Super Week as far as central banks are likely to mostly sit on their hands this week, of course. So given the geopolitical risk in these markets, we've seen this repricing of oil. We've seen this repricing of rate expectations globally. If you
take a look at some of the markets as far as fixed income, the yields in places like Europe, you've seen 50-point moves in areas like the UK market. So obviously we're going to be hearing from the Fed, but before that we'll hear from the Reserve Bank of Australia, we'll hear from the ECB, we'll hear from the Bank of England, we'll hear from the Bank of Japan as well. So a lot of attention on what they have to say this week. Obviously keeping tabs on the US-China talks as well. Looks like they've had some fairly good conversations out in Paris over the weekend, but obviously tracking these headlines this morning around whether President Trump will indeed go to Beijing as well, Nicole. So lots to keep our eyes on.
Indeed. So we don't know about if that Trump-Xi meeting happens. We have to wait and see on that. What we do know is happening is the GTC conference, and Jensen Huang will be speaking. It'll be a big deal.
Yes, and this could be the next catalyst for technology, which has obviously struggled to start the year, Nicole. So let's see NVIDIA's biggest event of the year kicking off today in San Jose. So this is obviously called the GTC, the annual conference that they have over there, the developer conference. And so CEO Jensen Huang will be taking the stage, I believe, at about 1 p.m. Eastern or this afternoon. We'll see what he has up his leather jacket sleeve as far as laying out the roadmap now for artificial intelligence, particularly because, of course, he has been talking about intelligence or AI factories. So let's see what he has to say about some of the tokens, which caught a lot of attention post that earnings report. AI agents, physical AI, robotics, inference. A lot of focus right now, of course, on NVIDIA's CPUs off the back of its GPU dominance, and also amid, of course, a lot of these other companies that have been coming to market with their own chips as well. Let's see as far as what he says with respect to demand, if there's any mention of China, given, of course, we didn't get any update on that with respect to the earnings. But, you know, it comes amid a very challenging backdrop, you could say, Nicole, for the technology sector as a whole, with, of course, these multiple compressions we've seen in software with respect to the AI disruption fears. I mean, just the concerns around the funding in general. I mean, the capex indigestion we've seen in these markets as well. I mean, NVIDIA has come off post-earnings. I mean, suffice to say, it's up about 50% or so over the last 12 months, but I believe it's down about 3% or so just this year. So analysts do believe that this could be the next positive catalyst, particularly as he does sort of lay out the supply, production, and demand. If that all aligns, that could be certainly a positive one for the stock moving forward.
All right. So I see it's at 2 p.m. Eastern time, thanks to our headline there. And so we'll follow that. I saw 30,000 attendees and 190 countries, 700 sessions. It's going to be huge. All right, Sam Bottas, great to see you. And folks, we are counting you down now to the opening bell.
Orbit. Oh yeah, if it's before your ordinary
trading is underway here on Wall Street, expecting some up arrows. The Dow's up 370 points at 46,914. The S&P 500 up nearly 1% at 6691. We are seeing also the small caps up 1.3% for the Russell, up 33 points, and the Nasdaq is higher by more than 1% as well. So great start here on Wall Street overall. What's leading the way? And by the way, it's looking like 90% green right now. Definitely some appetite this morning here. You have tech, industrials, utility, real estate leading the way. And so those are some of the winners here on Wall Street. Names like Mosaic and Paramount and Occidental are some of the laggards, some of the winners here on Wall Street that we'll be covering too, of course. Intel, SanDisk, Micron, Seagate, Western Dig, Coinbase. So definitely a tech day here on Wall Street thus far. Also, Diane King Hall is joining us, and starting with tech here, looking at Micron, which has earnings this weekend news.
It does. Yeah, a lot of different forces around Micron right now. As you mentioned, they have earnings coming up this week. They've got multiple analysts boosting their price targets today ahead of earnings, and then they're also expanding AI memory production in Taiwan with a second facility there. So let's get into that first. They said they will build a second semiconductor manufacturing facility there at a site that it recently acquired from PowerChip Semiconductor Manufacturing. The new facility will produce advanced DRAM and high bandwidth memory chips used in AI systems. They've already completed the acquisition of this site. The location has about 300,000
square feet of existing clean room space where they say where the chips will be produced in these tightly controlled environments. It will add this second fab rather, will add roughly another 270,000 square feet that will be built on the site. It's designed to boost its capacity to supply AI memory. We know that these are just really valuable right now because they're used in AI accelerators. They require large amounts of high-speed memory to run the models, to process data efficiently. So the surge in demand, as we know, has boosted memory prices. It's very much voted well for Micron, among others that you mentioned, Nicole, as well. We've seen their shares jump majorly over the past year and year to date because coming into today, Micron shares were already up about 25%. You see the move today adding another, Micron was up more than 50% year to date. It's confusing that with a different one. Adding another 5% on today's move, but on a year-over-year basis, that stock is up more than 300%. It was one of the big winners and still continues to be one of the big winners in this space. Even with expansion, though, the view is that supply may stay tight, which again bodes well and probably reinforces the view that the sell-side community has. RBC Capital raising its target on shares to 525. They've got an outperform rating. They're maintaining that. Baird and TD Cowen both boosting their targets to 500. They've got the equivalent of a buy rating for those. And so again, there's strength going into its results, but at the same time, it may mean the bar is higher, Nicole.
Yeah, looking great. All of those names up 5-6% now for all those memory stocks. So it's really giving a boost, and the earnings are due out on Wednesday. So we'll have that. What about the downgrade that we saw for Qualcomm?
Yeah, it's not having a major impact on the stock, but keep in mind the stock is down more than 20% so far this year. It's had a rough ride so far. I'm not surprised to see this because I've seen more and more analysts who are, not so enthused about Qualcomm, especially given that, its space within tech. Seaport has downgraded it to a sell from a neutral. They've set a $100 price target on this, so they see more downside risk from here. Once again, the shares are already in a bear market this year. They're trading near 52-week lows. They think the smartphone market could face new pressure this year because of those rising memory costs that we just talked about. And so the view is that memory prices are rising, so smartphone sales could slow this year. It would just be more expensive to produce. Analysts expecting global smartphone volumes could fall some 10 to 15% this year. Manufacturers could respond by raising handset prices, right, or reducing, the memory specs and devices. That's unclear. But consumers may hold on to their phones longer. And like last year, we had this super cycle for the iPhone, for instance. So the view is that, we would not see a second year in a row of that super cycle. And so that means for Qualcomm, lower chip shipments, pricing pressure as well, Nicole.
And then when I look at Dollar Tree and I see the up arrow, I feel a sense of relief because some of these retailers can go one way or the other in a big way sometimes. In this case, we see it up about 3.5%.
That's true. It can go either way. And honestly, in the pre-market, it was going both ways because initially investors were concerned about the outlook because they gave a little bit of a more cautious outlook. But it looks like since the earnings call, investors have changed their tune in reaction to this one. So as you mentioned, shares are higher by about 3% on there. And Dollar Tree has been a winner so far this on a year-over-year basis, I should say. It's up more than 60%. On the year-to-date basis, it's been under some pressure. In terms of the quarter, they swung back into the black, earning $2.56 per share on an adjusted basis. Keep in mind, they posted a loss a year ago. Revenue was $5.45 billion, so almost in line with expectations. Sales did climb overall, though. Investors taking a look at this outlook for the year ahead, they're forecasting annual sales of up to about $20.7 billion. Executives say that demand is strong, though. They talked about their budget-conscious consumers who are hunting for bargains there, and higher income shoppers who've been turning to the chain. We've talked about this, whether we're talking about Dollar General or Dollar Tree. It's a similar pattern to what we saw with Walmart several years ago. The six-figure income shoppers started turning to Walmart. And so executives here at these value chains are noticing a shift in how consumers are shopping and a shift in the income level of their customer base. So it's not just a low to middle income shopper, Nicole.
Everybody loves a good bargain, I guess, you know?
Yes.
Thank you, Diane King Hall. Great to see you. We'll have a lot more movers here on Wall Street. In the meantime, coming up next, Phil Reezuhn is standing by and from Opening Bell Daily, and he'll have some more details for us. Right now, the Dow's up 335 points. I'm glad you're with us. We'll be right back.
An isolated non-issuer transaction is exempt because it is not part of a regular security. I overthink everything. Some things are straightforward and I don't believe it. An investment advisor is risk adverse. Positions have the risk reward most suitable. Protected always. Investors seeking to benchmark most. I feel like that one is just something out there. Yeah, that looked foreign. EAFE, International Developed Markets, Europe, Australia, Far East. When presenting high-risk investment strategy.
While others recap the news, I help you read between the lines from what's moving markets to what's next with sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall and connect with me on LinkedIn for more.
Represents the cutoff between investment grade. Yup. It's the lowest.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, I had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
That has to be
live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
Welcome back to Opening Bell. We have some up arrows today, right? You're not that used to that. We've had 3 weeks of selling, but we are seeing oil down here. It's right now at $94.89 the barrel, and as oil has come down, that has given a little boost to stocks. Joining me right now, Phil Reezuhn, co-founder of Opening Bell Daily. And I'm so glad you are here. You speak to so many people, and you have so much information. What's the big picture on the market these days?
The big picture is, I would say, very mixed and uncertain. And first of all, thank you for having me, Nicole. What I'm watching right now, I've been digging into history to see how markets have typically reacted to 1, geopolitical shocks, and 2, oil shocks. So since the last 40 years or so, oil prices have seen a 20% gain over a 2-day period 7 times. And in those 7 times, stocks have been up a year later 6 of 7 times with an average gain of 24%. So to me, that is pretty bullish. You know, every instance is different, and you never want to draw your conclusions entirely from previous instances. But then if you look to geopolitical shocks, since the Korean War, we've seen an average gain after a geopolitical shock of 14.2% a year later. So that's a second variable I'm looking at. Between oil shocks, geopolitical shocks, stocks are almost never lower the following year. So between those two things, and then you still have the earnings story, which is pretty solid, pretty resilient. The actual fundamentals of the market, they haven't changed that much, even though there's a lot of fear, there's a lot of uncertainty, there's so much going on in the Middle East right now. And these are all very real things and certainly headwinds. But the story for investors I'm not sure if it's changed that much between today and maybe a month ago.
Right, and you know what's interesting? You talked about the 20% gain in 2 days for oil, and that we were up. You said the 2 day happened 7 times, and then stocks are higher later 6 of 7 times. So they sort of recover is the point, right? But the likelihood of being 20% up again on oil is probably slim. You know, I mean, we may trend higher or trend lower, but we've sort of digested that we are in a war in the Middle East. We've digested that the Strait of Hormuz is shut down for the time being. Do you expect that we'd have a 20% surge again?
Honestly, we could see anything depending on what President Trump tweets out. So he could say something and oil prices could swing again. And usually when oil prices go up, stocks come down.
Right.
So that's certainly in the cards, I would say. But all this is near-term chop. He's trying to figure out how to get through this situation, and you know, who knows, he might be doing it on the fly, there might be a strategy, I'm not sure, but markets will respond to whatever he says in the moment. So that's something that you can't really position for, unfortunately.
So at this point now, based on your history, looking back to the Korean War, looking back on oil moves, in all those instances, for the most part, you had up arrows following. So does that mean buy the dips?
ETFs are exempt from
I wouldn't make if I were to bet one way or the other, I would say, yeah, dip buying is probably a great strategy at this moment in time. And it's proven to be a great strategy under President Trump over the last year.
Right.
Remember Liberation Day, one of the worst immediate sell-offs and sharpest sells we've ever seen, followed immediately by the best rebound in history almost. So something like that, I don't know if we're going to see as dramatic with this oil shock right here, but generally, you know, I write for long-term investors, and I wouldn't be recommending to my subscribers to start panic selling or responding based on what's going on in the Middle East right now. Generally, I'm very much in the camp of if you're patient, then things will pan out okay.
And then when we look, you said now probably more so look to energy, less so to financials. Why?
Well, that's the story of the sectors this year, right? So energy's been destroying everything else. It's up from last year's momentum from AI. Everyone needs energy to power these infrastructure build-outs for the AI boom. And then it's also benefiting now from the war in Iran because energy prices are going to go up. The oil shock is there, so that's another tailwind for the energy sector. And then the complete opposite side is financials. We've had a lot of private credit fears. You've had some major banks controlling withdrawals in some funds. So that's fueled a lot of uncertainty in financials. So you have the best and the worst performing sector kind of bookended right there.
Looking at the Market Watch heat map, it's amazing. It's all green today, including all the Mag 7. You know, when you have one of these 90% up days, people feel good, especially after you've had selling for 3 weeks with the Dow and the S&P. Your thoughts on a day like this where the Mag 7 is doing, you know, I see a lot of green here. Your thoughts?
I mean, the story of the year so far, it's unbelievable. This the rotation out of tech has been pretty explicit, I would say. So the Mag 7 are still negative year to date as a group, and they've been one of the best winning trades of the last 3 years. And to start the year, they haven't really done anything except go down. So today, yeah, it's an anomaly, but this great rotation out of the Mag 7, that's also reflected in the S&P 493 has outperformed the S&P 500, and the equal weight S&P 500 has also outperformed. So those are a couple interesting things that I'm looking at, and you know, Green Day in the Mag 7, that's great, we can talk about it here. I'm not sure how much momentum there really is behind big tech right now.
And then for the Fed, your thoughts?
We're not getting the cut for a while. Yeah,
no cuts. What about does Kevin Warsh come on the May 15th?
We're at 65.
Probably. Okay. I think Kevin Warsh is everything's pointing
to happen, right?
Yeah, I don't see anything derailing that schedule, let's say, and you know, markets right now don't expect cuts until way later in the year. Suddenly, with the oil shock here and inflation fears, Kevin Warsh is going to come in, and my bet is that he's going to move some things around, and we're going to get more cuts than the market is currently pricing in.
Any predictions, surprises, or wild cards in your mind with all your research that you do?
Wild card. The only wild card that people seem to be underestimating right now is that the bulls will probably be right, as they typically are throughout history. Right now, everyone's very bearish. Bearish sentiment is very high. Everyone's pessimistic, looking at these negative headlines. I'm pretty much just waiting for things to come back, and if you zoom out a little bit, things always come back.
Phil Reezuhn, co-founder, Opening Bell Daily. Great to see you.
Great
Thanks
to see
for
you
being here in
Thank you.
person. We appreciate it. Coming up, folks, we'll take a look at the key levels to watch, the charts that you need to know, the numbers you need to write down. Kevin Green's all over it. Opening Bell. We'll be right back.
Keep going now, right?
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy. It's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Opening Bell. So glad you're with us on this Monday. We're getting you ready for a really big week ahead, and we're watching some of the key levels to watch. Senior markets correspondent Kevin Green is with us. Some of your thoughts on the levels right now.
Well, Nicole, we are seeing some strength to start off today's session. Over 88% of the stocks in the S&P 500 in the green so far, and you are seeing broad market participation. This is kind of eerily similar to what we saw last week on Friday, where we started off really strong, but once again, we did see a little bit of a reversal in the market, and that could be the case here today. We will see. It seems like the market right now is just basically getting closer to oversold territories. Maybe some buyers are trying to step in, some shorts probably covering as well, and then you have these positive headlines when it comes to the technology sector that's also giving us a boost. So if you're looking at to the upside, 67.40 is where we have seen the majority of the calls being transacted this morning. That would be your first major area of resistance. And as your area of support, 66.80, that's pretty much where we opened up today, and we started seeing some buyers stepping in. If we do see a reversal, we'd like to hold that level, and if we see any type of breakdown, 6,600. We are still seeing a wide range when it comes to the implied move in this market, with volatility or the VIX still sitting at around 24.5, still implying around a 1.5% move to the upside or downside. So a pretty decent start, but we got to be able to follow through for today if you're a bull.
Okay, and then what about diesel? That's on your mind. Why?
Well, it's one of those products that are in very short supply right now because of the heavy sour that's being disrupted because of the Strait of Hormuz. But if you kind of look at a chart on a 20-year monthly time frame, this is close to the area of resistance that we usually do see. Now, we could actually have prices continuing to move higher, but you have seen some sellers kind of stepping in here. Now, the monthly chart is still actually relatively bullish. If you look at the MACD, the 12 EMA is above the 26 EMA. This is the monthly chart. We have to remember that. And it's just crossing the zero line, which does suggest that maybe elevated prices could actually last here for another couple of months, but we are in overbought territory when you're looking at RSI. So we just hit a key area of resistance over the last day or 2 days, trading days for that matter. Seen some selling into that. And unfortunately, if we do actually still see prices above $4, $4.50, we probably will start talking about more demand destruction, not only domestically, but around the world. That could also bring energy prices lower here. So keep your eye out on this, not moving as much to the downside as we are seeing with crude oil, given the fact that we have a very big shortage here on a global basis.
Kevin Green, great to see you. Thank you so much. All right, it's time for a look at the big picture as we wrap up this first half hour of trading. And Joe Mazzola, Director of Trading Services with Charles Schwab, is with me. And what's interesting is we're higher here, but to your point that we did hit the low of 2026 on Friday, and that we've been down 3 weeks in a row and haven't seen that in a year. What do you think now?
I'll find app development talent part.
You know, I'm probably in the camp, at least in the short to intermediate term, of maybe fading some of these routes. We'll probably see a nice bounce this week. I would imagine that would happen. You know, maybe we get back up to challenging that high 6750, maybe even 6800 level. But I think we need to get back up there and kind of hold that level to make me feel like, you know, the range is reestablished, because that's where we were for multiple months. We broke through that range. And, you know, I just heard Kevin speaking about kind of what we're seeing from volatility, what the markets are expecting in terms of a move. And what's really interesting is even though you've got the VIX coming in quite a bit today, it's down about 10% today.
So that's going to change.
You know, the spread between implied volatility and realized volatility, basically the spread between what people are willing to pay for the move and what the move actually is, it's still pretty wide. So you're still seeing a lot of hedgers out there betting on bigger moves. We haven't gotten the moves. And I think that maybe that speaks to the fact that markets are maybe trying to see past you know, some of the volatility over the next couple of weeks and looking on the other side and thinking that you know, this might get resolved sooner rather than later. And you know, while that's all possible, I do wonder about maybe some of the damage, the pricing damage that's been done. If you look at whether discretionaries, staples, you know, they're all down 25% from their, you know, most recent 52-week highs. You look at financials, I mean, that's the worst performing sector year to date. And then you look at the overall breadth of the entire market, and less than 50% of the S&P 500 is trading above 200-day moving averages. And really, the only sectors that have performed as of late are energy and utilities, and those are the ones you want leading the charge.
Yeah, and I was listening to Secretary Scott Bessent, who was saying, look, we're only a couple of weeks in, and while everybody's talking about the off-ramp, it does seem that there is a possibility for an off-ramp, but just looking for a sort of the best deal possible kind of thing. So that maybe that does bring a little bit of relief to folks to think that this won't last forever. That being said, you said at this point now, and you noted consumer stocks down 25% off their highs. We've seen the markets down 3 weeks in a row. Maybe this is more of a stock pickers market than buying the whole thing.
No, 100%, Nicole. One of the things that I follow quite a bit is dispersion, and the dispersion in the market is now, you know, probably the most narrow that we've seen in a while. In terms that there's maybe about 12% of the stocks that are doing the majority of the heavy lifting at this point. And that was the case for, you know, a few years in 23 and 24 when everybody was complaining that it was the Mag 7 that was doing the heavy lifting. Well, they've kind of given it up, and now you're seeing even more narrow leadership. Ironically, a sector that had been kind of left for dead, software sector or industry, I guess you would put it that way. You know, they've been performing very well over the last couple of weeks, and energy's kind of taken the mantle of the leader. But I think what this means is you're going to see these fits and starts within different sectors, within different subsectors and industries that'll continue to lead. And I think what's great for a stock picker is looking for those opportunities to find that new leadership or that defined leadership that'll keep moving forward. You know, this week we've got the NVIDIA conference, we've got Micron earnings, so there's a lot that can be driving technology one way or the other, right? And I think Micron's going to have a high bar to hit, kind of given the fact it's already up 50% year to date. So kind of heading into those earnings, you know, that's been one of the better performers in the S&P 500, as I mentioned, up 50%. So it's really been interesting to kind of see, you know, where investors are kind of aggregating their money towards, and what it's becoming more and more apparent is it's fewer and fewer sectors and industries.
All right, and as you noted also, look, we have the Fed, but many central banks will be hearing from many central banks, so we'll get more input in that as well. And of course, we'll continue to follow everything with the Iran war and the possible delay of the summit for President Trump, which was due to happen in April. Because of logistics, that may not happen at this time, so we'll see what happens there. Joe Mazzola, great to see you on this Monday. Thank you for the setup. I really appreciate it. All right, everybody. Well, this is Opening Bell, and some of the winners here that I'm leaving you with. SanDisk is up 7%, Seagate, Micron, Western Dig, Intel, Corning, Dollar Tree. Those are some of the best performers here on Wall Street. Thanks for being with me. I'm Nicole Petalides, and the Dow's up 483 points. Keep it right here on Schwab Network. Morning Trade Live with Sam Vadas is next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always
68.
been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Welcome to Morning Trade Live. I'm Sam Bardis, live from the floor of the New York Stock Exchange. We have plenty to hit on both here and abroad over the next hour. So here is a look at what is coming up on today's show. Between the conflict in the Middle East and the US-China trade talks, there is plenty to watch on the international front. So we will take a closer look at what global risks could impact the market with a variety of experts. And over the next hour, we'll bring you example trades for NVIDIA and ServiceNow. NVIDIA's annual GTC event kicking off today, and ServiceNow is moving higher this morning after an upgrade for that stock as well. We'll discuss all of that. But for now, let's take a look at where markets stand around half an hour into this trading session. Of course, a fresh week of trade. We saw some de-risking going into the weekend, and we are rebounding this morning. We've had the S&P 500 reclaiming 6,700 today, up a 1.3% right now. The NASDAQ 100 doing a similar thing as we see this rebound across technology, as of course NVIDIA's biggest event of the year gets underway here. So many think that this could be a positive catalyst. We will discuss that throughout the course of the program. We've got the Dow Jones putting on 522 points right now, up over 1%, and the Russell 2000 outperforming here as well, up 1.7%. So we are seeing a nice risk-on day across equities today as oil is pulled back, although still elevated, but well up the highs we've been talking about. So a little bit more optimism in these markets this morning as we get up and running and really finding their footing. Let's take a look at foreign markets, see how things kicked off the week over in Asia. We had a bit of a mixed session out there. The Nikkei 225 just down fractionally, but a very nice day for the Hang Seng Index, up a 1.5% off the back of some improving Chinese data, and thanks to some of the big cap tech names as well, some individual stories to highlight there. Tencent and Baba will be out with earnings later in the week. The FTSE 100 currently trading right now up 1%, and the German DAX is also up 0.7%. So a little bit more optimism out there in international markets as well. Let's take a look at some of these futures products as well, because of course it is a central bank bonanza this week. We will of course be getting rate calls from the Fed, the ECB, the BOJ, of course the Bank of England as well, just to name a few. So we've got the 10-year yield just ticking back a little bit there. We're at 423 right now. The US dollar index taking a little bit of a breather off the strength we saw at the back end of last week at 100 for the Dixie. We're at 99.56 right now on dollar index. Gold is sitting down around about 0.5% right now, but still holding that 5,000 level. Crude oil is at $93 a barrel. That's the big story for us. It's down 5% in the session, so something to keep an eye on, of course, as we watch all these developments. A very headline-driven market with, of course, the price of oil there. Bitcoin, 74,000. It's been interesting moves. Very much there's a lot of talk about the surging demand for cryptocurrencies. Some analysts are actually linking part of this performance to some of the capital flight perhaps happening in the Middle East. So that is up 4% right now and has got up to 74,000 and change, as I mentioned. So very much something to watch at the moment as we see this surge in cryptocurrencies and the price action there. Even though we have some of these risk-off days, it has been very much outperforming. So let's get to Kevin Green, who joins me now, senior markets correspondent. Very good morning to you, KG. We've got a bit of data trickling through right now. First and foremost, NAHB housing market index data. Just talk us through what you're seeing there.
Well, we are seeing this number actually exceeding the street's expectations by 1 point, coming in at 38. Street was looking for 37 for this diffusion index, and we did see a slight revision to the upside from last month as well. But if you're looking at it, that below 50 level is still showing a negative outlook when it comes to the housing market. And obviously, we've seen a lot of volatility when it comes to interest rates that could be leading to some of this, as well as prices still staying elevated, even though we are seeing inventory kind of hitting the market. It's not a big market mover when it comes to the economic data itself, but something to keep your eye out on. If we do see it continue to move to the downside, that could actually put a little bit more pressure on the home builders in general, and that also could be a tailwind for the Fed when it comes to inflation. So I would say not the best print if you're looking at it from a historic basis, but we did not see any type of further deterioration from last month's print.
Okay, optimism going into the spring housing season, of course. We'll be keeping an eye on that data as well. Let's talk about the story that is really front and center here, and that is, of course, the price of oil. No doubt coming back off these triple digits as far as WTI is concerned. Walk us through the weekend headlines. What is moving these prices right now? Because obviously we've seen talk of some ships getting through the Strait of Hormuz. I know that they've been talking about Indian ships passing through. I know that their situation is getting pretty critical across a number of commodities. I was looking at LPG over the weekend as well, but they've also talked about the US trying to build a coalition on Iran to address some of this too. Just walk us through what you're seeing there.
Well, we had the strike on Cargo Island on Friday evening, and that obviously created a lot of skepticism around the market, especially if those assets on that particular island were to be hit. It seems like it was just only military assets that were hit, and we will see if there's any further developments on that front. Obviously, some speculation that potentially boots on the ground on that island could happen in the future, but it doesn't seem like the market's pricing that in right now. You continue to see strikes on the UAE as well as Saudi Arabia, some of their oil infrastructure. That's also then putting a lot of the oil production offline at this point in time. And you still have this kind of debate back and forth as to who is transiting the Strait of Hormuz. We are seeing Iranian ships continue to go back and forth, as well as some tankers destined for India as well as China. It seems like India might be trying to work directly with the Iranians in order to create a deal for safe passage. I'm not sure if that's completely has been solidified, but we do know that a couple of tankers have been able to transit the strait. And as you talked about the LPGs, the liquefied petroleum gases, that's really propane, butane, as well as the other cooking gases is really in short supply in India and really impacting their economy overall. But we are seeing a sell-off here. I think that's really on the back of a lot of countries are not really actually, I haven't seen one country yet commit to actually helping out with the Strait of Hormuz and trying to defend the strait. And I think the market right now is kind of pricing in the fact that maybe we can keep this conflict within the region itself, even though it's still obviously going to have a major impact when it comes to the global economy. If it doesn't spread, or we don't have additional countries kind of helping out or assisting, that could also then relieve some of the pressure or the tension regarding the Strait of Hormuz and other areas of the market as well.
Okay, and speaking of some of that pressure, obviously we've been tracking headlines this morning that maybe Trump's trip to Beijing could be postponed or delayed over keeping the squeeze on Iran. Besson coming out this morning and sort of pouring cold water on that narrative. Just talk us through what you're seeing there, what the significance of that could be, as of course this really is front and center. I was listening to the Chinese last night with respect to some of their data, and while it did improve, they are very worried about this situation, despite them looking a little bit more insulated than the rest of the world.
52 range as well.
Yeah, I think that was initially the narrative that was attached to the potential cancellation or deferment when it comes to President Trump moving and going overseas to meet with President Xi. I think, one, it could be a political move. Two, it also could be logistics and security, especially in wartime. This could be a situation where they would like to keep the president in the United States in the event that something does escalate even further, and then probably maybe some risk when it comes to himself just in general. So I'm not too surprised that we could see a potential delay, but we do have trade representatives talking right now, and it seems like they are coming up to some form of a framework to keep the tariffs where they're at right now and trying to basically create some wins or have some wins for when they do actually meet together.
Yeah, and it's interesting because the Global Times, which is often seen as sort of the mouthpiece of the Communist Party, talking about this really sharing responsibility, is sort of about sharing the risk of a war that Washington started and can't finish, was their line coming from state media. So, you know, as far as what the Chinese think of this, it's very interesting. Talking about some of the other commodities, KG, what are you keeping eyes on? As I mentioned, LPG seemed to stand out to me as far as the Indian situation, but what else should we be watching right now?
You know, I'm actually keeping my eye out on the grain markets. You are seeing a sell-off within corn as well as soybeans. Those are two agricultural products that are within the energy space. So as crude oil has been moving to the upside, we have also seen the grains move higher as well, hitting a key area of resistance when you're looking at soybeans around this 1225-ish area. That's the 200-week moving average. So a technical resistance level as well as lack of enthusiasm, at least for now, when it comes to the energy complex. If we do see maybe a glut in oil, or we do see a resolution when it comes to this particular conflict, we still have the SPR releases that could actually be a negative for the oil patch just in general. When you're looking at prices, that could also be a negative for the agricultural markets as well. So keep your eye out on them. They have been running pretty aggressively to the upside here, but we pretty much have been priced at a very significant premium compared to some of our competitors in Brazil and Argentina. So a rollback of some of that price action seems like it's in the cards right now.
Okay, keeping an eye on the grains as well. KG, really appreciate it. Thanks so much for that. And we will chat to you throughout the course of the day, of course, keeping an eye on these markets and these oil prices. Coming up, we will take a closer look at the state of the global trade with Michael Shaul from the Ion Macro Fund. A Morning Trade Live will be right back after this.
I don't want to. Well, actually.
I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
This makes sense.
Intern, this place is incredible.
It's where I get all your office supplies.
Your golf balls,
Your fancy coffee, your giant TV.
it's everything in one place. It's like
Schwab. Everything investors need, all in one place.
Come again?
Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between.
Think I'm gonna be sick.
We have to buy that now.
Schwab.
Invest your way with Schwab.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com. We're back for Morning Trade Live. Dollar Tree is moving higher this morning after reporting mixed earnings. Q4 comp sales grew 5%, but revenue came in below estimates. Dollar Tree expects a 3 to 4% comp sales growth in the current quarter, and full-year guidance arrived in line with estimates. So we're higher today by 5%, trading at 113 and change on Dollar Tree. Let's take a look at some of the other winners on the session, and we have got a nice day for some of the memory companies. SanDisk leading the gains here, up 7.2. Seagate is not far behind there, at 6.3%. Micron also higher. It's got this deal out in Taiwan we've been tracking, so that's up as well. And some of the more consumer-facing names, the cruise lines, Norwegian up today 5.3% as oil has been coming off those triple-digit highs we've been talking about. Here's some of the losers on the session. Among those are some of those in the business of these fertilizers and chemicals. We've seen some nice gains for the likes of Mosaic and CF Industries last week, so they're coming off a bit off the back of what we saw in previous sessions. We've got T-Mobile down at 3.3% as we stand as well. So there's some of the losers on the session as we, of course, are tracking this more risk-on mood in these markets this morning. Stocks looking to stabilize off the back of 3 weeks of losses. Joining us now is Michael Schall, who's the portfolio manager at Ion Macro Fund. Very good morning to you, Michael. From a macro perspective, how are you watching this conflict in Iran and this energy shock right now?
You know, I think it really matters how long it lasts. I think that as volatile as the front end of the oil curve has been, as you say, we've been well over $100 a couple of times. You know, so far the energy market seems to believe that this is a maybe 60, 90-day story, and the back end of the curve, you know, late 2026 or 2027, you know, still has much lower prices. So that really, if I'm looking at something to try and work out what's changing on any given day, you know, I think it's those back end prices which are much less volatile, you know, that would really give you a signal that market expectations are changing.
You know, on Friday, we got an update on GDP, not just from the US, but also the UK. That failed to grow as far as that economy, which was the backdrop going into this energy crisis. And then that revision basically cut in half here in the States to 0.7%. I mean, what do you make of the macro environment going into this conflict now with respect to the energy shock that could be leading to possibly stagflation?
You know, I mean, I think if we're talking about the States, the overall economy is okay. You know, the economic data is somewhat messy. It's, you know, it's never very reliable even in normal times, but let's not forget that we still have all the distortions from the government shutdown in the fourth quarter. But, you know, I think we have a sloppy, somewhat stagnant labor market, and everything else is, you know, looks somewhat okay. You know, I think the idea of stagflation, you know, if this word has been wheeled out, I don't know how many times over the last 50 years. I'm very open to the idea of inflation. The stag part of it, I don't see right now. You know, I don't think anything's really changed so far.
Okay, so you don't see much of the stag part?
No.
Right, understood. And that is based on what exactly? I mean, where are you seeing the strength coming through? Because, you know, to your points, I mean, Michael, we did come into 2026 looking pretty optimistic around productivity. But I just feel like with this global repricing of oil, this global repricing of rates, we've also had somewhat a degree of a global repricing of growth expectations too. I'm just wondering, you know, where you anticipate that strength to come from, that resilience in the economy.
Well, you know, I'd push back on the idea that you've seen a major repricing of rates. I mean, it's true that rates came down a lot.
Look forward to move with Reezuhn
again,
and
but
everything
you know,
else
the
that has to do
10-year
with Reezuhn.
effectively really hasn't gone anywhere over the last 6 months.